Welcome back to our special show, Super 17, where we've got our market stalwarts, 4 of them, and we're going to give you 17 stocks for 2017. We're already done with 4. This is set 2, and let's kickstart once again with Mr. Tulsian. We've seen sugar stocks do very well in 2016 itself on the back of a rise in sugar prices. But you think something like Dwarikesh Sugar could give more returns from here on and be a multi-bagger?
It will be wrong to call it as a multi-bagger, but if you really see last year at the same time when the UP government has kept the SAP of sugarcane constant at 280, that was my call, and at that point of time the sugar stocks gave the multi-bagger return. It rose by 50% to 500% in about 4 to 6 months time, and probably that's again the theme here. If you take the case of the Dwarikesh Sugar, it's an integrated sugar mill. They have 3 sugar mills in UP, 21,500 is the crushing capacity, 30 kiloliter per day of distillery, 86 megawatt cogen. And if you see, there is only one unlisted sugar mill which is operating with the highest recovery. So there is no point in referring it. I'm not mentioning the name also. But the average recovery of this company will be closer to about 11.5%, while the other mills on an average, taking all the mills together, won't post a recovery of more than 10.5%. Now if you see at that time last year, if you all recall, I said that FY16 will be the record performance on the financial front by these leading sugar mills. I'm saying that FY17 will surpass FY16. It is like Sachin, breaking his own record. So FY17 will again be bumper. Quickly, just to recap, in FY16, the Dwarikesh has posted an EPS of 22 rupees. In first half, they've already posted an EPS of 42 rupees. I am expecting EPS of 80 rupees for FY17, which we will get to know just in next 5 to 6 months time. For the simple reason that the recovery of 11.5%, the crushing of same quantity which they have done for last year of about 25 lakh bag plus will get produced, and the best part is that the current season of sugar season 16-17 all India will not see a production of more than 210 lakh bags or 21 million bags, which was 25 million bags plus last year. So I'm expecting that maybe come April or May, the sugar prices will get sold in UP ex-mill at 39-40 rupees, which is now getting sold at 34, and that's my assumption, relies on that realization. PAT of 150 crore, market cap of 550 crore. And if you see the debt just sub 200 crore, which is largely availed either from the sugar development fund or for financing the working capital. So I would say EV of 550 crore against the expected PAT of about 150 crore. Mind it, I'm using the word PAT, not the cash profit. So you are getting a 3 P multiple, of PAT to market cap. So I think that the stock has potential to give you a 50% return, giving a target of 435 in next 1 year.
Okay, that's Dwarikesh Sugar. A lot of us have moved on from Sachin to Virat Kohli. You are still...
No, but Virat Kohli has to break the record. I've said that Sachin has been breaking. First, he has to set the record, then he will start breaking it.
Sure.
So probably that will be 5 years down the line. First, he has to let him first build the record.
Oh, yes, for sure. Okay, Prakash, Shakti Pumps, interesting stock. Heard a lot about it, but somehow has not been able to really be the kind of stock that a lot of people thought it would be. From here on, what's the story here?
Yeah, so, just let me anecdotally put it in context. This is a stock that till about 2014 had done about 5x in the last 3 years prior to that. It went all the way to 275 and all, and then last year it started seeing a huge slowdown in its exports business. Incidentally, the company is the largest and the only of its kind in terms of manufacturing all stainless steel pumps. Submersible pumps are usually cast iron made. So it's a simpler technology to use cast iron. You just put a die and put the molten metal in and get the casing out and put a pump together. In a stainless steel pump, you can't use casting. Okay, so you have to assemble close to 144 different components to make a pump. And that technology these guys mastered, and it brings in energy efficiency, it's lightweight, and because of stainless steel being much more resistant to rust, it has a higher shelf life, biological life. So you don't have to pull the pump out every 3-4 years. It goes all the way to 6, 7, 8 years also. Now this company was exporting primarily, and that was a growth engine to the Middle East, a lot of to Europe. And both these markets crashed. So last year they had just I remember the bottom line was just about 2 crores for the whole year on a 135 crore 230 crore top line. What's changed now is that they shifted focus from the Middle East to US and a little bit to the Australian, New Zealand subcontinent, and that's paid off brilliantly. So they've started getting their numbers back. This first half of FY17, they've done an EPS of close to 2 rupees plus, as against the whole year EPS of 1 rupee plus. Okay, so that change is veritable enough. The other major change is they've gone into solar pumps, which is unique to this entire model. You have a steel submersible DC motor fired pump which uses solar energy. The three things are a very deadly combination. My sense is you'll now see the turnaround. So I like the stock because it's not run up yet. It's in this mayhem. It's been in that 125, 130 bracket. It's overvalued if you look at historic earnings and all. But from a futuristic level, I think it will start paying off. I expect an EPS of 10 rupees by FY18 and it pays off.
Dipan, another pharmaceutical stock for you, Aurobindo?
Yeah, that's right. It's been a favorite stock of ours. Consistent performer for the last several quarters or so. And the number of filings it has got in the US market for exports over there is quite phenomenal, amongst maybe the highest as far as Indian companies are concerned. Now, they've been managing the US FDA inspections also pretty well, as you can see that none of their plants have come under any observation or anything adverse has come out of that. So that's one part of the business which they manage very well. At the same time, I think, despite 5 to 7% of erosion, they've been consistently growing their US business because of new molecules which they have launched, as well as higher and higher production. Now, over the next 6 months or so, they've got many new products going on stream. Because of capacity constraints, the profitability and revenues for the first half are slightly constrained, but that I think will throw up in the second half as well. And then they have the European business where they are taking more and more products into manufacturing into India. So that could expand their operating profit margins. They've taken on a lot of debt for some acquisitions, but that also debt is coming off because of free cash flow. I think around 17-18 times current year earnings, I think Aurobindo can give a very good return to investors going forward.
Okay, a lot of healthcare stocks in focus. Djit, Shilpa Medicare is a stock which has done well actually over the last
actually,
few years.
from our initiating coverage, it has already given 5 times. And we still are bullish. We feel that in next 6 months probably it will be another 100% more which can come from here. Now, few reasons why we still bullish and what we liked about it. They are into oncology space, purely dedicated to oncology. API right now they're moving into formulation. Now, good part is that in 2014 when we spoke to them, the promoter talked 2 things. One, that I don't know anything about what returns I can generate. That is your work to do. I won't do that work. Second thing is that 2018 will be my blockbuster year. So for 4 years nothing will come. And still the stock has performed. So that is because people have confidence that he can deliver. And he has already delivered. Whatever timelines he gave, all those timelines have been very well met. Last 2 months they got 2 approvals. One from EU, imatinib, which is Gleevec for Sun Pharma, big product, though may not remain a big product over some few months. But second is this azatidine, which is again Dr. Reddy's big product, Vidasa. So that he has got from US FDA. So probably third quarter onwards, third quarter of this year, numbers will start coming in. What we are building is that 100 crore profit in FY16 can actually go to 250 crores in FY18. So that's the kind of growth in the numbers that we are expecting, and I think that's what he has been guiding, which is working. The other important point to note is that if you talk to the promoter now, he will talk of 2024 and 25, not of 2018. Right. So that's the kind of vision you have on this stock.
Okay, 8 systematically analyzed stocks for you, but we're not done just yet. We've got 9 more stocks lined up for you, but after a very short break. Stay with us.